Today, we're going to talk about Bitcoin and institutional adoption of Bitcoin. That includes sovereign adoption like El Salvador and some of the Central American countries that are adopting Bitcoin, and also more specifically, institutional investors getting into the game. And before we do that, we're going to go ahead and go into what I know everybody's interested in, and that is the Bitcoin price. We're coming into the weekend. And cryptocurrencies are all over the map. Again, if you follow my videos, every day I talk about this. It seems like every day altcoins are up, one day even double digits, the next day they're down. So it's really interesting. And what would be fun to do if you're into this kind of thing would be to put together a spreadsheet of your favorite altcoins, maybe the ones you're invested in or the ones that you're following, and just kind of start tracking them. And you can look at, I'm looking at CoinMarketCap, whatever you want to look at, you can see which ones are up for the day in double digits. We have some that are up in the lower double digits. You have some that are down. So we can look at the ones that are down for the day. And some of those are in double digits. So it'd be interesting to track some of these and kind of track where the money is flowing to and from in these altcoins and how it relates to Bitcoin. If you're kind of interested in that type of thing, and depending on what you're doing, if you're day trading, there's some good margin to be made here. You can make 10 to 20% on any given day, depending on what you're doing. But you really need to know what you're doing. You have to watch your limits and your stops and make sure that you don't get caught. So Bitcoin has been running running a little bit down today. We had a little bit of some hourly downward action. This is the hourly chart here, starting at about 3 o'clock this morning. It's been running downhill ever since, and now we've got a couple of ticks up here in the last few hours. But remember, the most important time frames, if you're doing trading, you can get down into the hourlies and the minutes if you're doing day trading and that type of thing. But generally, the most important time frames for trend analysis and trend investing are going to be your daily, your weekly, and your monthly. And again, if you look at your monthly, Bitcoin was just parabolic straight up in the air, and now we're retracing and coming back. And when you look at that and really study that, it's pretty eye-opening. It is a downtrend. It's a down market. And we're very close to potentially, if we don't reverse trend, and I'm going to show you what reverse trend means and looks like. If we don't reverse trend soon, then it looks like we are going to officially be entering a bear market. And you can compare these cycles that we're in now, this current cycle we're in now, from that parabolic move, and look at last market cycle tops and what they looked like. So the monthly is very important. The weekly is very important. And this is where you really need to see change in action to confirm any definitive reversal of a trend. You really need to get those daily higher closes, those weekly higher closes in order to lock in any kind of a reversal of a trend. And since our all-time high, we had a lower weekly, another lower weekly, another lower weekly, and another one. So it's lower highs, lower lows. So that is your trend. And again, the only way to reverse it, as we would have to at this point, we'd have to get a weekly close above 35.7. More importantly, you want to get a weekly close really up above that 40,000 range. That's really what you're looking for, especially on a daily. But little steps, we got to get it up above a weekly close above 35.7. Then your next benchmark is going to be 38.9. Then your next benchmark is going to be 46.5. And if you get a close above 58,000, then there is no stopping Bitcoin in that regard. And we could be off to that 100,000 plus mark that a lot of people seem to think that we're going to see this year. And but we better get to work quick, because July starts next week and we are going into the weekend, and Bitcoin has lost a lot of steam here. We had a little bit of an uptick the last few days. We were touching back. I'm looking at the daily here. We had touched back close to almost 35,000 yesterday. And today we are in that 32 to 34,000 range. Yesterday we closed in. We tried to get above 35,000 for a close, could not do it. That was our last daily high, was 35.7. So again, how do you reverse a trend? So we were trending up here, and our range between 35 and 40,000. So we were really looking to reverse this trend. We really needed to close on a daily, not a wick, but a daily full-bodied candle. We need to close above 40,000. in order to reverse that trend. And we were kind of ranging between support and resistance in that 36,000 to 40,000 range. So now we are down in this trading range, trading zone, where we need to get above 35.7 on a daily close in order to reverse this trend, but we're trading in that 30, 31, really 31. We haven't been below on a close. We haven't been below 30,000 yet, or even 31.6. So we're in that 31 to 35, 30 to 35 range. And we could potentially trade in that range for a little bit, kind of like we did up here, that 35 to 40. We could very well trade in this 30 to 35 range here. So we'll see how that shakes out. That is a likely scenario to play out. It doesn't look likely that we're going to have a bounce here. It looks like we've already had a bull trap play out. We are in price discovery mode here, and we'll talk about that in a minute. This head and shoulders, if we don't get a significant downward price action movement over the weekend and continue this pattern down, then this large macro head and shoulders will be invalidated if we continue to trade along sideways here. And what that could likely be more representative of would be some sort of more of a potential accumulation range for a bounce. But again, we're in a downtrend. So those Wyckoff patterns that you're looking at that people are referencing, those are more likely to play out with the trend of the market that you're in. Remember, the trend is your friend, and you have to have a reversal of trend in order for that cycle and for that pattern to play out and for it to be reversed. So those are the things to think about when you're thinking about reversing trends and looking at trends. And I was looking at some of these Wyckoff models here earlier, and there was one that was really interesting in terms of the psychology of the market and how these models can potentially play out in terms of what we're looking at right now with the long-term ranges of Bitcoin and even in the short-term time frames to kind of, let me go look at this real quick. Where is that chart? I'm going to pull that one up for you. It's the psychology of the markets and where we could potentially be right now to kind of give you a heads up of where this market cycle could be. Got a couple of different ones in here and something to kind of think about in terms of how this whole thing plays out from that distributive top that we had, a little bit of this. So we came down off the peak, had a little bit of sideways action, drop, had a couple little daily bounces because again, I'm on daily candles. Then we dropped. Then we've been playing sideways a little bit, drop. You get a little bounce, drop. You get a little bounce, sideways, a little bit of a bounce, drop, a little bit of a bounce, and then we could go sideways again before we ultimately start dropping off again in terms of what could be more of the long-term pattern of how this could potentially play out with the psychology of the markets. And here's the one that I was looking for right here that very well could be what we're seeing in relation to the Bitcoin chart. So here's your distributive top where everybody has that confidence and enthusiasm. Then you get a little bit of a drop, which is kind of a subtle warning and kind of a disbelief. Hey, what's going on here? Is this trend over? Then you get that big sell-off with that little bit of a distributive range, and you get that big drop that panics everybody with a bounce. You have a little bit more of a distributive range and it drops down, and that's where everybody starts kind of getting discouraged. And then it bounces around in here and just kind of wears you out. Starts trending up a little bit to kind of give everybody, off guard and kind of freak them out a little bit. And then it drops down again, and then you're all the way back to where you started from again. So that is an interesting chart to look at and how it relates to Bitcoin and how it works on this little pattern that we're looking at right here, which is kind of how these things work, right? So it's up, down, up, down, up, down. And if you think about somebody who's on the other side of the trade, what are they trying to do? They're trying to frustrate the opponent, trying to wear them down, wear them out. And if you notice the sentiment out there, a lot of times, if we get a little bounce up to 40,000, everybody's extremely bullish. And, they have projections of hitting 200,000, 500,000 Bitcoin before the end of the year. And then as we get closer to 30,000, everybody's bearish and they're talking about a bear market. And then you have the day traders that love this range because there's a lot of opportunity in this range between these 10 and 20% swings. And then you have investors like me that are just looking for entry and exit points fascinated by the moves and the trends in the markets and the patterns. I really enjoy looking at these patterns. And as you zoom in and out, these patterns really start to look a lot alike. I really like this head and shoulders kind of look here. It's just really interesting in terms of a retracement. If this thing does trace all the way back down to that 20,000, potentially even 10 or 15,000 range, it kind of completes full cycle and full circle of that. So where we are today is discovery. So we're trying to figure out, the market is trying to figure out a fair price for Bitcoin. What is a fair value for the price of Bitcoin? And we talked about it the other day in terms of an all-time high of 65. So now we're down to 32. That would be 55% discount. So is Bitcoin cheap at 32,000? You have to remember, not even a year ago, if you go back to June of 2020, Bitcoin on this day, which is the 25th of June, let's go June 25, Bitcoin was trading at about $9,200. So we were at $9,200 a year ago. 6 months before that, we were at $4,000. Bitcoin hit 65. Now we're at 32. So what is a fair market value, and how do institutional investors look at that, and how do they form fair market value? How do they arrive at a price that represents fair market value for them? So we're going to take a look at that here in a second. One thing to be aware of, the B Word conference. So if you want to understand how institutions approach investing in cryptocurrencies and Bitcoin and how they view it, what they're thinking, there is a conference that's being held by Kathy Wood, ARK Invest, Square, Jack Dorsey, Paradigm, a lot of the institutional investors in the game. Kathy Wood, she's projecting $500,000 Bitcoin. Jack Dorsey said there's nothing else in his life more important than working on Bitcoin. Adam Back, CEO and founder of Blockstream. John Newberry, director of Brink. So this, you can go to the website, thebword.org, Bitcoin word, thebword.org, and you can register. This is going to be a live conference where you can listen in and follow along. It'll be really interesting. And then apparently there's going to be a debate between Elon Musk and Jack Dorsey. I don't know how they're going to do that. That should be a lot of fun. You never know what Elon is going to do or say. So that'll be really interesting. But this conference could be really good for anybody who's curious how the institutions approach the business, what they think of Bitcoin, what they're looking at. So we all know that it's going to take broad adoption of Bitcoin from an institutional standpoint to really drive the price. There's just not enough retail buyers out there, not enough people in the public, and there probably won't be anytime soon, just because of the volatility of it, the just lack of information out there, a lot of the false information that's out there, a lot of the accurate information. There are a lot of risks with cryptocurrencies and Bitcoin. So people just don't understand the space, and the people that do understand the space understand the risks, and that's where the institutions are. So the institutions right now have no appetite for Bitcoin at this price level. JP Morgan and Goldman Sachs are obviously two of the top investment banks in the world, and a lot of people love it or hate it, listen to them and rely on them for advice and for investment direction and valuations of investments. So the problem is Bitcoin cannot get back above 35,000. And that's what I was telling you, is that a lot of what this is about, not only is it just generating liquidity for big market moves, and it's a good range for that. And it's one of the best things for Bitcoin because it's showing stability, and it's carving out its own valuation the longer it stays in this range without a huge move up and then a drop, or a big drop down and a huge move up. That's not good for the asset in the long term. Stability, consistency is the best thing for the asset long term, especially this type of asset, which is a store of value asset, which is how it's being labeled, how it's being billed, and how the regulators are going to look at it and how they're going to regulate it. And it is going to get regulated. The entire space, these assets, Bitcoin is a store of value, cryptocurrencies, that's venture capital. Those are going to be viewed more as stock, almost like stocks and issuing stocks, and how companies raise capital and issue securities. Whereas Bitcoin itself is more being viewed as an asset like a gold, like digital gold. And in terms of regulation and what we can see in terms of how the institutions look at it, that's exactly how they're looking at it. And that's how it's being billed. So what JP Morgan is saying, based on the price action of Bitcoin and its inability to get back above that 35,000 range, is that they're saying the fair value based on its allocation and volatility profile in regards to gold, in comparison to gold, they're valuing it at 23 to 35,000 over the medium term once they get in. But right now, they're saying that those prices are off the table for the foreseeable future. They predict that full convergence or equalization of volatilities or allocations between gold and Bitcoin is unlikely for the foreseeable future. And you have all kinds of things that JP Morgan is positive on the space overall. However, they just do not feel like the current valuation of Bitcoin is a good entry point for their investors. And following an April all-time high, Bitcoin has been hovering between 30 and 40,000 for the last couple of weeks after driving below 29 on Tuesday. The price is moving around 34, according to Cointelegraph Markets Pro, and TradingView data. So this is kind of the institutional viewpoint, and especially with Grayscale unlocking their Bitcoin and the drawdowns that could potentially occur there. The institutions are in wait and see mode. A lot of people kind of figured the institutions would step in and really drive the price up. The institutions are not going to be the buyers of $100,000 Bitcoin. The institutions want to see Bitcoin for entry at scale around $20,000. That's kind of the price they're targeting. Guggenheim, Scott Minerd with Guggenheim came out today, and he said on CNBC that he sees the technicals are indicating, not him personally, but the technicals are indicating Bitcoin can drop to and will drop to 10 to 15,000 before it recovers, and ultimately recovering again to that range of about 30 to 40,000 is kind of where they're placing fair value. Now, he had at one point recently called a price point of 600,000 for Bitcoin. And then he dropped it to 400,000. And then there wasn't enough institutional demand to support Bitcoin's all-time price of 41,000, and then it could retrace to 20. And then in February, he again said it was 600,000. So he's kind of been all over the map with it. They are invested in Grayscale's Bitcoin fund, so he does understand Bitcoin. He does have a long-term favorable outlook on it. But again, the question is the price. What price are the institutions seeing as a fair price for Bitcoin? Now, here's another one. Sam Bankman-Fried is an OG cryptocurrency space Bitcoiner billionaire. And even Sam is saying that currently Bitcoin is overvalued from an institutional perspective. And really the only people that are paying a premium for Bitcoin and buying on the dips are retail investors like Michael Saylor. Michael Saylor and MicroStrategy, a lot of people think MicroStrategy and Tesla are institutional plays, institutional buyers, and they're using their entries as justification for prices above 40,000. But you got to remember, those are basically retail buyers with a lot of money to use, and it's not their money. It's borrowed money. It's leveraged money. So one of the interesting things about Sam, this is a really great article here about Sam Bankman-Fried, and talking about over the next couple of months, he wouldn't be surprised if there's at least one more thing coming out about Bitcoin. There's always something coming out about Bitcoin. Obviously, he has confidence in the crypto market bouncing back. He said, but the institutional money is still planning on coming in, but it's going to be months, possibly even years, because number one, they're slow moving, they're careful, and it takes them a long time to make their decisions. On top of that, he's not seeing much potential. He's not seeing much potential for riskier trades that were made on borrowed money or margin to be liquidated now, as a lot of the leverage has been taken out of the market, which again inflated the price. So that's one of the things you have to remember, is that at 65,000, that was a lot of 100 to 1, 50 to 1, 40 to 1, 20 to 1, a lot of leverage that were driving those prices. So it wasn't a fair valuation of the market where it stood. So we'll get into that in a minute, which could be a good thing in terms of the argument that's being made of a mid-cycle correction. So we'll talk about that. And I have my last two articles are going to be for what's the upside potential for Bitcoin, whereas now we're talking about risks and downside. So the potential for those things to drive the market down are a lot less now. So in terms of the overvaluation due to the froth in the market, that's less likely to drive the market down. So while that's, he's talking about, pointing at dropping borrowing costs in crypto and dropping Bitcoin futures, while not a bullish sentiment, it is a sign that people are no longer holding risky long options. So the rate of crypto adoption among institutions may have taken a bit of a hit, which might delay more funds from flowing in as fast as they would without the recent collapse in prices. But Galaxy Digital, Mike Novogratz, everybody knows them. Institutions are going to be pivotal in continuing the uptrend. So eventually the institutions will be getting in at scale. Right now, they're just trading volatility and exposure through options and futures of price action, dipping their toe back in, trying to understand what's a fair market value for Bitcoin. And if you have a fair market value of about 30 to 35,000, somewhere in that range, then what you could say is another indicator to look at on TradingView. You can look at the Parabolic Bitcoin Indicator, which is pointing to $20,000 price point on Bitcoin after this correction completes its cycle. And there's more and more technicals pointing to $20,000. So it could very well be that we're headed to $20,000 at some point here during this correction cycle that we're in. And you can go back on TradingView and get this Parabolic SAR indicator to kind of look at what these reversal trends look like after market cycle peaks. So that's an interesting article to kind of look at, is that Parabolic Indicator, and looking at how these trends were reversed in the past with all of the market cycle peaks that we've seen over the years throughout the history of Bitcoin. And again, this is all good stuff. It has to clear out. We had to get the leverage out of the market. We have to have a correction for long-term health of the market. You have to have a stop and a reversal whenever you have a parabolic market. And a lot of people don't think Bitcoin had a parabolic blow off top. But again, it's all in how you look at it. When you expand out and look at your time frames on a weekly time frame, that's pretty parabolic. When you look at a monthly time frame, completely parabolic. So when you look at the correct time frames, that's a parabolic blow off top. A lot of people just aren't realizing that and are discounting it. Now, what's the good news in all this? Like we said, if the institutions are pegging Bitcoin somewhere around $30,000 to $40,000 roughly as a fair market value, that means if it does dip down below 20, that's when they're going to jump in. So I know a lot of people don't want to hear that. And if you bought Bitcoin at the top and you're hoping for the best, it's just going to be a matter of time. So if we hit 10, 15, 20,000, that's going to be an absolutely good thing for Bitcoin. It's going to be the best thing for Bitcoin. And it's going to be the best news the bears would ever want to hear, because that's when you're going to see institutions jumping in at scale, throwing billions to hundreds of billions of dollars into the space, buying Bitcoin, which ultimately should drive the price up and create FOMO amongst the institutions, which will ultimately drive that price up. Now, how far can it go? We don't know. If fair market value is 35 to 40, and here's another article here that you can look up comparing past crypto cycles, suggests Bitcoin is nowhere near the top. So there's a lot of debate out there now in terms of where are we in cycle, in this cycle and in the trend. And a lot of people don't think that we have completed the cycle. This is checkonchain.com, where you can get a lot of on-chain charts and analytics. Really neat website, checkonchain.com. And you can see the previous cycles, 2010, 11, in blue, in red, 2011 to 15, in orange, 2015 to 18. These are your 4-year cycles. And I know there's a lot of debate on diminishing returns and lengthening cycles and stuff like that. But here's where we are currently in 2018 through 2021 in this cycle. So it would suggest that we have not completed our cycle. And that very well may be true. So we could potentially be in the middle of a cycle, whether it's 4 years, whether it's, a lengthening cycle, whatever it is. We could be in a corrective phase of the cycle, like you saw in 2017, 2018, where you had a little bit of a correction, or even this 2011 through 2015, where you had a mid-cycle correction. This could be our mid-cycle correction that we're in right now that ultimately leads up to a higher high for this cycle before we enter into any kind of a more sustained bear market. And again, a bear market doesn't have to be years and years. A bear market could be 6 months, it could be 1 year, it could be 3 or 4 months. So as far as that goes, in terms of our cycle and where we are, this could be a mid-cycle correction. And if 35 to 40,000 is fair market value, then we could just trend up from here, ultimately until where we go. So this could be a corrective phase. We kind of bounce along here. Maybe we drop down into the 20s a little bit, and then maybe it just gets driven back up. The question is, will it surpass that 65,000 and ultimately get back up to 65, 100, 250, 300, what some of the projections are out there. And if you think about what could potentially drive the price that high, it's going to take a lot of capital entering the market. If Bitcoin right now is a $600 billion market cap at $31,000, we've just dipped down to 31.9 while we were doing this. At $600 billion. So you got to think about, what is a $100,000 Bitcoin? Well, you need $2 trillion. Bitcoin needs to triple its market valuation. So you need another $1 trillion basically, or more, to come into the market. Retail buyers are not going to do that. The only thing that's going to drive valuation of Bitcoin is going to be institutional adoption, not adopting Bitcoin as currency. That's not really going to do it, because that will that creates a lot of legal issues, legal problems, as you're seeing with El Salvador. The currency is not the ultimate value proposal for Bitcoin. Storage of value, asset like gold, that's ultimately what will drive institutional investors into Bitcoin, something that's less volatile, more stable. In order to bring another $2 trillion into the equation, which is basically what you need to drive Bitcoin up to $100,000 or more, think about that. The entire market cap right now is only 1.3 trillion of everything. All the altcoins, Bitcoin, everything combined, 1.3 trillion. Bitcoin is 600 billion of that. So in order to get Bitcoin to $100,000, you have to triple this to $1.8 trillion. You need $1.2 trillion to come in. So $1 trillion is 10 $100 billion. Michael Saylor just did everything he could possibly do to raise about $1.5 billion. That's all he's got. He can't not do anymore. He can't go any further. That's it. He's tapped out. So when you think about that, where is this money going to come from? Goldman, JP Morgan, institutional banks, investors that have 20, 30, 50, $100 billion. And even then, it's going to take a lot more wealth beyond that. And most of these firms and funds are only investing a small percentage and allocating a small percentage of their investable capital into the market. So it's going to take some time. But the good news is that stopping the screen share here. The good news is that is on the way. So regulation is on the way. Countries are working out their issues in terms of the currency question. Banks are working out regulatory rules so that they can allow their customers to trade Bitcoin using their bank accounts, and then ultimately for broad scale adoption to be able to use your cryptocurrencies at point of sale in retail locations, grocery stores, restaurants, things like that. And that's kind of what PayPal is working on, Square, Stripe, companies like that, allowing you to use and hold your cryptocurrencies through their payment gateways and vehicles so that you can use it from a more retail standpoint, which allows for more broad scale adoption and things like that. So it's just going to take a matter of time before institutional investors get into the game at large scale. We have to finish out this price discovery. Bitcoin is going to continue to be volatile through the weekend. We know weekends can be a little funny. They haven't been too bad the last couple of weekends. It's been fairly steady through the weekends, which is interesting. So we'll just have to see how it shakes out this weekend. If Bitcoin can hold above 30,000, then it's going to continue to trade in that 30, 35,000 range. If it closes above 35,000, then we could start looking for more of a reversal of trend. And then we're going to look for that 40,000 close, get above 40,000. But if we're closing below 30,000, then we have to look for the continuation of the trend to the downside, which is, again, it's a good thing. The sooner we get to the bottom, the sooner that we will get more people jumping in, and the sooner that Bitcoin will be back towards where it was in terms of the all-time highs.